All right, today our Jennifer Schonberger interviewed SEC Chairman Gary Gensler about the crypto collapse. Here's what he had to say.
There's about 10,000 of these crypto tokens. And then there's not just dozens, but maybe hundreds of service providers, broker-dealers. They might call themselves exchanges. I might call themselves other things. You might think of them as the casinos, wherein the investing public is looking for a better future. And because most of these tokens are securities, that means that the storefronts, if you wish, or the casinos need to come into compliance with our time-tested laws.
More from that interview later in the show, but in the weeks following the FTX collapse, the question is turned to when, not if, the next domino falls and whom it might be. How widespread will the damage be? Is there any longer such thing as an actual stable coin? Well, Liz Hoffman is a writer at Semafor.com. She's been reporting on this story. Liz, good to see you. How stable is the stablecoin Tether?
So far, it's mostly held up. And we should explain the stablecoin. The idea is that it's tied to something. Its price is pegged to something else. Most of them are pegged to the US dollar, but there's some that are pegged to euros or gold. And the idea is that you give them your money, they give you a stable coin, and when you want it back, you can get it back at exactly that $1 peg. So these things should trade kind of like money market funds, right at $1. And if they start to quote unquote break the buck, that's when things get dicey. Tether has dipped under it a couple of times. It's regained its ground for the most part since the FTX collapse. But the real concern about Tether is the assets that it holds. But what did it do with customers' money once it got it, and how liquid is that cash? Could they get it back if they needed it? And everything is seizing up across the crypto ecosystem.
Yeah, and Liz, that's a big question. I know you dug deep into this just in terms of what this could potentially mean, how big of a risk this does mean, or this could be for investors. So what did you find? So Tether, the last sort of a disclosure they made was in September, and they had about $69 billion of assets, the vast majority, 82% of which was in things that look pretty liquid, things like treasuries, cash, some reverse repurchase agreements, but things that, if they are what they say they are, should mostly be fine. The problem is that when you get redemptions, you have to sell the stuff that you can sell. And so over time, the less liquid parts of the balance sheet, what you're looking at there, the other investments, which appear to be mostly equity stakes in crypto startups, secured loans, again, they're lending against tokens. That stuff is much harder to sell. And so, if there's a lack of confidence and you start to see real reserves come out of that company, people wanting their money back, they're going to have to sell the stuff they can sell, which means the stuff they can't starts to make up a larger percent of what they own.
And to that point, investors have pulled $4 billion out since late October. Why, and what's been the impact?
Well, in part, everyone's just freaked out, right? This was the FTX collapse is just a real existential moment for confidence in the crypto ecosystem. The other thing, though, is that there's a couple of reasons you might want to own Tether. Certainly, if you're just bearish on crypto and you like the space, but it's also sort of a token that you can use within crypto ecosystems. You get some trading benefits. It's a pretty easy way to move around. You might think about it if you go to a video arcade and get a bunch of tokens. They're helpful to have. There's just a lot less of that happening right now, right? A lot of people have just been totally scared out of the crypto business or sitting on their hands. So there's not a whole lot of utility. There's not a real reason to own Tether if you're not doing a lot of crypto trading, and you're not getting really compensated for the risk of whatever else is on their balance sheet. Whereas you can put your money in treasuries and get 4% these days. So it's really a push and a pull that people really got scared and driven out. But also, if you're not playing in the arcade, there's not a lot of reason to own a bunch of tokens.
Well, Liz, let's do a scenario here. What if it fails? Talk to us just about the ripple effect, how concerning that would then be for the entire crypto industry.
Tether is hugely popular. If you think about it like a stock, it's got a market cap of, in the $60 billion range. Obviously not quite as big as some others like Bitcoin and Ether, but it's big and it's held in a lot of places, and it is the collateral for a lot of loans. It's a thread that if you start to tug on it could unravel very quickly. I should say Outflows have stabilized in the last couple of days. They have said very publicly that they are perfectly solvent, perfectly liquid, that they will be fine. But I think if you look at FTX, and I want to be a little careful because there's some underlying, behavior at FTX that's problematic. When confidence comes out of these systems, it comes out all at once, and you end up with what looks, to most lay people like a run on the bank, and it just happens incredibly fast.
Liz, when you take a look, I guess if people are interested in crypto, don't really know where to put their money, a little bit spooked about everything that's played out within that industry over the last several months. From your reporting, I guess, where would you identify the safest places to be at this point?
I try very hard not to give financial advice, particularly in crypto. Look, Bitcoin has held its value better. I mean, we all remember a time a year ago, and it was 50, 60,000. It's now around 16. And it was, I think, a little over 20 before FTX went under. But that seems to be, people have more or less gotten their head around that there will be some more or less permanent value there. So that's held up pretty well. Ether has held somewhere between 1,000 and 1,500 for a while. So those seem to be the winners in all of this. But as we've seen, the stuff can just change so quickly.